Braden from the GPAR team. Thank you very much for joining us today. Before we get into today's session, I want to look ahead to tomorrow morning, which is at 10 o'clock. We're going to have Jack Barry doing one of his workshops, and this is going to be about keeping a buyer for life. Great opportunity to better your business. It will last about an hour. Jack will draw from his vast professional experience and the things that he's learned along the way. There's going to actually be an interview with somebody, a live interview, so that you can pick up some tips and tricks as to how you can go ahead and create buyers for life. Jack has an approach in which he maintains these relationships, and they're not just about one transaction. They're about building something a little bit more meaningful and stronger that also helps him out with his business down the line. So hope you'll join us for that. That's tomorrow morning. It's 1 hour long. It's at 10 o'clock. And then fast forward Monday, we have another session in which we're going to look at the report about Black housing in America. We're going to look at some of the roadblocks and impediments to increasing the amount of Black homeowners in the United States, as well as other information that will tell us more about what's happening with Black housing. Look out for an email from us tomorrow with more information about that. We've been sending them out as well the last couple of weeks. So we hope you'll join us for those two sessions. With that, we'll get into today's session, and it's all about HUD. We have Ron with us, Hana, and Cathy. This is one of our really good presentations that we've had, particularly during the pandemic, in which we've had lots of our members join us for this session. So there's going to be a lot of walking through about what to do, how easy it can be. They'll gladly take all of your questions, so please do not be shy or bashful. If you have a question or something doesn't seem to make sense, we encourage you to raise your hand, throw something in the chat, whatever works best for you. So with that, I'm going to hand it off to Ron Rudolph. Hey, Ron, how's it going?
Hey, Matt. Hello. Well, HUD's back in business. We got inventory. Absolutely. Woohoo! There was a change of contractors. Those of you who are in the Pennsylvania and New Jersey side, the contract was awarded to rain companies, and there is inventory in 3P and 5P, which is Pennsylvania and New Jersey. A lot of you have never placed a HUD bid. We're going to do that today. We're going to walk you right through placing a bid. And this is all I've been doing for the last 21 years as a HUD broker. I do very little retail. It's a difficult contract, but obviously we must be successful if we've been at it for 21 years. Some years ago, we had the entire state of Pennsylvania, and we closed on 2,300 HUD homes in 1 year. And I didn't have a team. It was just myself and an assistant. And it was basically on autopilot. We just knew what to do. But the most important thing with HUD, at least we feel, is the financing. I mean, let's face the facts. Any of us can sell a house. It's easy. The house is off price. It's at least 20 to 30% under retail, most of them. It's sold as is, 100%, regardless of what's wrong with it. All HUD homes are sold as is. The hardest part of a HUD transaction is the money. You have to have the money to close. And unfortunately, all lenders do not do as-is properties. In fact, very few of them do. There are ways of financing a HUD property, especially for an owner-occupant, which in Pennsylvania and New Jersey and a few other states, all you need is $100 down. Now, come on. If you can't sell a house for 30% under retail, with $100 down, maybe you should consider a different position. Now, in order to get this financing, you're going to have to do your research and your homework. Well, we've cut hours of that off of that. It's Cathy Miller. Wait, everybody, Kath, wait, unmute yourself so we can hear you. Hello, there we go. Still can't hear you.
Can you hear me, Hana?
Now we can hear you.
Yeah, you can hear me. Okay. It must have taken a second.
Cathy has been doing most of our FHA 203K financing. Some of you have never done it, but it is absolutely the greatest program that HUD ever put into existence. You can sell almost any HUD home to an owner occupant for $100 down and take all of the repairs and most of the improvements and put them into that same $100 down mortgage. And I'm going to end my little chit chat with an example of what we did a little bit ago. Where was this nice house? The one for $300,000?
Medford.
Medford, New Jersey. High-end area. The house was listed for, I think, $250,000.
Yeah.
Right. It should have been, well, it was in a $400,000 to $500,000 neighborhood. So we never had to worry about an appraisal. So the gentleman who purchased the house needed that house. He didn't want it, he needed it because he was getting divorced. His wife lived around the corner and they had joint custody of the children. So he had to have that house. He didn't want to lose it. So he bid a little bit above the ask. He remodeled most of the house. I think he put $50,000 or $60,000 into it. By the time he got to the settlement table, his mortgage was a little over $300,000, and he was still $200,000 plus in equity. So he listened to what I said, and I said to him, listen, 6 months into the mortgage, you call the mortgage lady up and you say, mortgage lady, I want to refinance my house. He saved about $250 a month on the mortgage insurance. He pulled out, I think he pulled out 50 or 60 grand to do something else with. His mortgage payment is still less than what he had it when he closed. And I'm his new best friend. But some people, they think it's too good to be true. But it's true. It's a HUD insured product and it's out there. Time's yours, Kath.
Thanks, Ron. Hi, everyone. Ron has given a good introduction as far as how the renovation programs work. When you're purchasing a HUD property specifically, majority of the times the property they're in need of a little bit of love. Not all the time, but majority of the times. And it's really difficult to get those homes financed with an FHA mortgage, to be specific, because when you go through the property with an appraiser, they do an inspection of the property. And if they find anything that's a health or safety issue, as you know, then they're going to call for those repairs to be taken place prior to closing. HUD will not repair anything prior to closing, nor will they allow your client to have anything repaired prior to closing. So that's where this renovation mortgage comes into play. There are two different kinds of renovation mortgages. There's an FHA 203K, and then there is a Fannie Mae conventional home style. Today, we're going to specifically talk about the FHA 203K because HUD offers some benefits by using that program to purchase one of their properties, specifically what Ron just talked about, the $100 down program. So instead of having to put down a normal 3.5% down payment, the borrowers only have to do $100 down. And when I say $100 down, I'm talking about $100, and that's including your purchase price, your renovations, and everything that's added together. It goes into one mortgage, and it's only $100 that they have to put down. So that really helps borrowers to get into these HUD properties. So we're going to go through the slides. The first slide here is regarding within the FHA 203K product, there's actually two different types of 203K loans. There is the limited 203K, and then there's also what's known as the standard or full 203K. So on this slide, we're talking about the limited 203K, which means it's anything that's uncomplicated, definitely nothing structural at all. It's mostly cosmetic repairs. And what we're talking about here are anything that would be $35,000 and below. So your contractor costs have to be below $35,000. So what you're going to need to do also include into there is going to be what's known as the contingency reserve, your permits, and any fees. Can you give me 1 second? I just want to go take care of something. Hold on 1 minute so that you don't have to listen to this dog.
Yeah, now mine will start barking. But anyway, picking up on a few things, the gentleman that we did this program for, we even got HUD to pay 3% of the closing costs.
I'm back. Sorry.
Wait a minute. So with 3% of the closing costs and his settlement charges and his down payment, he bought a house which is worth now over $600,000. The total amount of cash he needed for settlement, for mortgage company charges, and for down payment was $3,600, which was absolutely incredible to buy a house that price range for $3,600 total cash out of pocket. Okay, I'm done.
Thanks. Sorry about that. Okay, so when we're talking about this $35,000 for the limited 203K, that includes what's known as the contingency reserve, the permits, and the fees. So typically, the actual contractor repair price on a limited 203K is about $29,500. Then the contingencies added in to that, and it brings it up to that $35,000. Any type of repair can be done except for structural. So we're talking, you can replace the kitchen, you can replace the bathroom, you can put new hardwood flooring. There's no limitation as far as the material that you're using with this FHA type, this type of FHA mortgage. What happens after closing? So prior to closing, we will actually have everything completed as far as what the repairs are going to be. They're agreed to between the contractor and the borrower. After closing, after you're out of the picture as a realtor, the contractor will then be given the initial draw, which is 50% of the cost of the materials or 50% of the cost of the repairs, whichever is less. Usually it's within 5 to 7 days, but I will say that if there's anything to do with permits, that any permits required, our company requires to have the permits in hand before we will release that initial draw. That's the benefit of this program. At the end of this limited K, we'll send an appraiser out once all the repairs are done, and that will be how we know that we can release the final payment to the contractor. But like I said, that part is really not for your concern as a realtor, but it is good to know, to let your clients know as you're discussing this type of loan for a HUD type property or any distressed property. Typically, the down payment is 3.5% of both the purchase price and the renovation budget. In certain areas, HUD allows that $100 down. And obviously we're talking about an FHA mortgage. So again, it's only primary residences. Go ahead, Hannah. With any FHA mortgage, the county loan limit always applies. So that will be with both the renovation budget and with the purchase price. The project after closing, it has to be completed within 6 months. So all the contractor repairs have to be done. However, we like to see them done within basically a 60-day time frame, 45 days, but we give up to 6 months. If there's some sort of an issue, they will give an extension on that. So that's not something that is a huge concern, but they do let the contractor know in advance that the project should be completed within a 6-month time frame. All the contractors must be licensed and insured. They have to give us references, and we'll actually vet the contractor. So most of the lenders will vet all of the contractors. So it's not a specific 203 contractor that you have to get. You just have to make sure that the contractor is licensed and insured, should be in business for at least 2 years, and that they have references that they'll provide to us. And then we take it from there. We'll give the contractor package for the contractor to complete prior to closing so that we can make sure that that contractor is definitely a good contractor for the borrower to be using for their project. In this type of loan, a HUD consultant is not needed with a 203K limited. And we'll get into what a consultant is in a moment. On this slide here, you're just looking at an example of all of the repairs, and it's soup to nuts here. I mean, you can do roofs, gutters, spouts, septic systems can be done with a limited. It's basically, you just can't do structural. So you can't add additions. You can't, if there's anything that says there is a structural support needs to be repaired, and it's just like a small little repair in the basement or in the attic, it's no longer a limited. It becomes a standard 203K in that instance. Okay, so here is our standard 203K. Some people call it the consultant. Some people call it a full 203K. Same guidelines as the limited. So we're still looking at a 3.5% down of the purchase price or the HUD $100 down program, as long as it's within that area that HUD has the program. Still primary residence, must be completed in 6 months, and the county loan limits. The big difference here is you can do structural, so you can add an addition. You can do that repair, any type of structural repair that might be required. If there's a front porch that has an issue with structure and the posts need to be replaced, yes, that can be done. The biggest part of this type of loan is what's known as a HUD consultant. A HUD consultant is someone that is trained by HUD. They don't work for us as the lender. They basically are contractors that go out to the property with your client prior to closing. They go through the property with them and determine what is going to be required by HUD, and then listen to the borrower as to what the borrower wants to do in addition to. And then they create a report for that borrower. The HUD consultant, there are fees. They're all regulated by HUD. And basically, we'll go over that in the next slide. One other thing to point out on this, which is important. With this type of mortgage, with the full or standard 203K, the borrower can finance up to 6 months of the mortgage payments as long as we have enough equity in the property when the appraisal comes. So that's helpful for a borrower so that they're not having to make 2 payments after closing when they're having all of the renovations done. It has to be agreed to by the consultant. The consultant has to let us know that the property can't be lived in while the repairs are being done. Go ahead. So this is just explaining examples of the repairs that can be done in this type of loan. We've gone through them already. One thing to point out, no luxury items are allowed on either of the FHA 203K programs. Luxury items meaning a pool. On the conventional side, they do allow things like that, but HUD definitely is not interested in being involved in that. But foundation repair, structural addition, yes, we can do that with this type of loan. The different types of properties, single family, obviously, you can do a 2 to 4 unit family as long as the borrower is living in one of the units. Can also do a mixed use, meaning commercial and residential, as long as the residential side is the greater of the square footage. So the residential side should be more than 50% of the square footage. The debt to income ratio, the minimum is a 600, the credit score minimum is 600. Debt to income ratio, we run all of our loans through a program called Direct Underwriter, or DU. That usually helps us to determine how high we can go on the debt to income ratio. Typically, if we have a credit score that's up in the 680s, we can bring that debt to income ratio to 56.9%. But it's a case by case basis. If we have a credit score of a 600, not going to happen with that type of debt to income ratio. We're probably going to need to be somewhere in the 45% DTI. I'd like to try and work with the borrowers to get their score up in that case, but it can be done if it's needed. Go ahead, Hannah, sorry. Okay, so loan to value, we've talked about the down payment. So this is just the flip on a lender side of saying the same thing. The loan to value is 96.5% for a purchase. If we're doing a refi, it's 97.75. There is the ability to go up to 110% of the after improved value for a property, not a condo, but the way that works is when the appraisal comes in, we can do up to 110% of the appraised value on these FHA mortgages. Identity of interest transactions between family members or affiliates, there's usually a conflict of interest there, so that's not typically something that we will work with. But if it's between a family member, we'll allow. We're talking about HUD here, so that wouldn't be a part of it. Go ahead, Hannah. Okay, so what's a contingency reserve? I talked about that earlier when we were talking about the limited 203K. So with a contingency reserve, basically, if we have, let's say, a repair budget of $10,000, that's what the contractor bid is. The contingency reserve will be up to 5%, 5 to 10%, depending on the actual property of the renovation budget, not the whole loan amount, but of just specifically the renovation budget. It can go up to a percentage of 20%. It really is dependent on what is being done with the property. And as a lender, I would say the average is the 10%. I've seen sometimes where if there's no utilities, they move it to 15, but it's usually somewhere around 10%. After the improvements are made, this is where the contingency reserve comes into place. So if there's a problem in the property that the borrower didn't see, the contractor didn't see when they were coming up with the bid prior to closing, now we're at after closing. So now what? Where are we going to get the money to do this repair? That's why they put this contingency reserve into place to try to take care of any issue that might pop up that might be unexpected. Always with an FHA mortgage, it's going to be a health and safety issue that has to be taken care of first if we're talking an order of how these items are taken care of. If there's any type of change that the contractor wants to make that has anything to do with what was already agreed to as far as repairs go, we do have to get a request for change letter. What the contractor will normally do is they'll go through the HUD consultant for that, and then the consultant will go back to us as the lender and let us know that there is going to be a request for a change. We can do it as long as the appraiser says it doesn't change the value of the property. Okay. Contracts are always written out for the purchase price. So a lot of times when you get your pre-qualification letter from your lender, it's not going to say the amount of the loan. It's going to actually say to be determined, because we don't really know what the cost of the repairs are going to be at that point when we're at the pre-qual point. However, I will let my clients know, look, for this property, if it's a $100,000 purchase, you can go up to $50,000 in renovations, just so that they know ahead of time as far as with their debt to income ratio and their credit score, where they're going to qualify for. That's all taken care of, but on the pre-qual, don't get concerned if you see that it says to be determined on there. And the sales contract obviously should indicate that it's going to be a renovation 203K mortgage. There are costs with renovation loans. It's the cost of doing business, okay? So all lenders that I know of have similar costs. Basically, with us, we have a supplemental origination fee. That's in addition to our normal origination fee. It's saying here it's 1.5% of the reno budget, or $350 to $500, depending on which program you're using. $350 for the limited, $500. It's actually, when we give out the loan estimate, it's already calculated in based on the renovation budget we're expecting. So the borrower will know ahead of time. There are draw inspections when we're dealing with a HUD consultant. So there are additional fees for that. There are title updates. Every time a draw is paid out, the title has to be updated for the new actual loan amount. Then there's the HUD consultant fee. HUD consultant is paid prior to closing by the borrower. Their costs are anywhere from $400 to $1,000, and it's specific to the cost of the renovation budget. The consultant will let them know ahead of time. They'll be paid at the time that they meet with the consultant. However, the buyer/borrower has the ability to get that consultant fee back once we close the loan. And then obviously any permits and architect costs. Okay, so the consultant is actually probably your best friend as a realtor. Ron doesn't like anybody to go through one of these loans without talking with a consultant, because it just makes everyone's life easier. However, on the limited K, it's not a requirement. On the full 203K, it is. A consultant is basically the eyes and ears for me as the lender, and he basically is the go-between between the contractor and the borrower, okay, whatever the borrower wants. So it's really helping that borrower out. What a consultant will do is the initial report that they write up and provide to us as the lender is called the Specification of Repairs, or the SOR. And then obviously they do the draw inspections and the final or exit inspection as well.
Cathy, there's a question in the chat. It says, what if using limited with a $30,000 repair budget and then the demo reveals more damage? Perhaps it's structural. Does that jump necessarily make repair costs above 35K?
Yes. So if that is found out after closing, we would still be, once you close, that's it. There's no changing the loan. So if something structural comes up after closing, they would allow for the contingency reserve to be utilized towards those repairs. If there is anything additional that's required there, the borrower would pay the difference out of their own funds. Okay, but as far as if we're prior to closing and this should take place and there's an inspection that happens and it turns up that there are structural issues, as soon as we see that there is anything being mentioned about structural, it immediately becomes a full 203K or standard 203K. Does that answer? I think that's good. Go ahead, Hana. This is just an example of what an SOR, or Specification of Repairs, looks like. They're all pretty much use the same form. A lot of the, what'll happen is they'll actually put pricing in these reports. The pricing will just stay with the borrower, and then there'll be a secondary report that has no pricing, and that'll go to the contractor. What has to happen is that contractor's pricing has to fall in line with what the consultant is saying the cost would be. If there's something something that's not equaling out there, or they're not agreeing on price, they have to work that out. And typically it gets done very easily, with the contractor just explaining what the reason for their additional cost is. Obviously, if it's lower than what the consultant says, nobody cares. This is just the actual fee chart for the HUD consultant. These are standard set in stone. I will point out, if you see at the bottom, it says feasibility study. A feasibility study is actually the report that would be done by a HUD consultant for a limited 203K. Every consultant's pricing is different on that. Can be up to, I've seen a few of them charge up to $400, but the borrower would know ahead of time when they called for the consultant to come through. It's still a good idea to have them come out. They do inspect the property, look for things that could be an issue, especially in this type of loan program. It is, but they don't have to do a specification of repairs for the lender, so that's why it's less expensive. We're going to pass through this the Fannie Mae part. The Fannie Mae part is conventional. One thing I will tell you that does relate to HUD in this case is if you have investors that are looking to purchase HUD properties or any investment properties for that matter, and they don't want to take the money out of their pocket for the repairs, they can finance the properties through the home style program. And basically for, I believe it's 15% down on the investor product, and they can go ahead and do a conventional home style, fix the property up. And obviously with all lenders, we don't work with flips. So the intent would be that you're hanging on to the property and using it as a rental property. I think that's it, right? Okay. So Ron, I saw that you had you were popping through a couple questions. Let me just go through those.
How much reserve does the borrower need in the bank? In other words, how much, 2 mortgage payments, 3 mortgage payments, or none?
In majority of cases, none. It's all going to depend on the credit score. Basically, any scores that are below a 620, I've been seeing we call for reserves in that case. So anywhere between the 600 and the 620 for the credit score. I've seen what I do as a loan officer is I just keep running DU until I get an approve. So sometimes it's 2 months. In some cases, if it's a 600 credit score and it's, the DTI is on the higher end as well, I've put in 6 months and gotten them approved. So it's going to be borrower specific, but anything that is 620 and above typically doesn't require reserves with FHA.
Okay, I know that this has changed, at least I think it has. Previously, HUD was accepting 100% gift letters of what the borrower needed. And we actually got someone in quite a few houses for nothing, 0, absolutely nothing out of their pocket. Does HUD still allow the 100% gift letter, or does the borrower need some money of their own?
I'm going to say although they say that there is no limit on the repairs, on the gift letter, okay? They say there is no limit. That's what the guideline says. I still have an issue on I would say 75% of the files that are using 100% gift, because they want to see a little bit of the buyer having some skin in the game. So can it be done? Yes. I believe it's going to take into consideration your credit score. So if I'm talking a credit score up over 680 and I have a DTI of like below 50%, most likely that's going to go through. But it's really specific to this automated underwriting system. So my answer to that question would be, have your client pre-qualified, let them talk to the lender, and when we run it through, initially speaking to your client, we will run it through direct underwriter as a 100% gift. If that tells me approve eligible, then I'm good. If that says I'm ineligible, that means that I have too much gift in there and I need to reduce it. So, and it may only be the borrower taking a couple $1,000s, and it never has, the odd thing is there's never issue with that with seller credit, but the gift, if the buyer has nothing out of pocket, sometimes it will throw an ineligible on that. So I think it's specific to the client.
Okay, let's talk about many situations that we've had in this crazy market that we're in.
Oh, geez.
A lot of the younger people are still living with their parents, and their parents would do anything to get them out of the house. And, you know, we've had many situations where that has happened.
Yep.
Just tell me if it's changed. We'll get a lead call on a HUD property, and the first question you ask naturally, is this going to be an investment or is it going to be owner occupant? Okay, well, it's going to be owner occupant. Oh, that's nice. Do you already own a house? Well, I won't be living there. My son and his wife and the 6 kids will. I said, where are they living now? He said, they're living with me and I will do anything to get them out of this house. So I said, if you structure it like this, the deal will fly. You are not the primary buyer.
Right.
Your son is the primary buyer. You are the co-signer, a non-owner occupant co-signer.
Occupying co-borrower.
Exactly. So we get dad's money or mom's money, whatever the case is, 100%. They pray for me that this deal is going to go so these kids get out of the house and they can go back to maintaining whatever lifestyle they have. The kids get into the house for nothing, but dad still has a vested interest in the property because he is co-owner.
Right.
Can we still do that with the changes that HUD made?
We can.
We can.
I haven't had any issue with it. No.
Well,
I mean, a
I
lot of
don't have an issue.
when you say the changes that HUD made, a lot of the changes that were made, are you referring to like the COVID changes? That whole, because HUD didn't make changes, lenders made changes with COVID. Is that what you're talking about?
Yes.
Okay. So there are still, my company specifically, we've lifted the majority of our COVID restrictions. We still have requirements where, you know, the day before closing, we need to verify the borrower is still employed, things like that, that we could do further out. We've lifted a lot of that. So I would say that it's lender specific there, Ron. Some lenders may say no, and it may not be allowed, and some will allow it. We are allowing it.
But it's not a HUD reg that the
No.
co-borrower.
They didn't change anything. It was lenders who changed it. Like we did. I remember you and I talked about it. We had some changes, but a lot of them have been lifted now. So
Does the co-borrower have to be related to the borrower?
yes,
Blood relation or closer than that?
I've only done it with a parent, Ron. In my instance, a parent, that was I would have to look and see if it's specific, if it's following, you know, that family, that, you know, how with a gift it has to be if it's only from a family member, that HUD will allow a gift. So, and definition of a family member can get pretty broad, you know, it can be mother-in-law, father-in-law, it can be, it can be a foster parent. It can be, you know, it goes far out there. The only thing I've ever had an issue with was cousins. But yeah, I would honestly think that it would be okay with everyone, but I'd have to check that, Ron. I haven't had a case where it was anyone other than the parent where I was.
And the last thing, because we're very creative, you know, you have to be creative in this market. As long as one of the owner occupant buyers, let's say it's a husband and wife, or a couple, or whatever the situation may be, as long as one of them has respectable credit, we can use that particular buyer as the primary one. If both of them have derogatory credit, we're in trouble.
Right. Yeah, typically in that case, if, especially with a husband and wife, we would have the wife be on the HUD contract. So say, I don't know why I said wife specific, but either whoever has the negative credit or does not want to be financially responsible for the loan, they would go on the HUD contract. They would not go on my loan application. I would note that they're going on title. So they'll be, whichever spouse will go on the deed and be listed. So actually they will be required to be at closing because there'll be documents that they have to sign. So they will not sign the note, which makes them financially responsible. That'll just be signed by whomever we're using as the applicant. And then both borrowers or both buyers would sign the mortgage because they're spouse and they're both going to be living in the property.
Well, you see, this is good that we're chit-chatting about this, because so many buyers have called myself and Hana and other agents complaining that agents have told them, unless you're going to occupy the property, you cannot buy it as owner occupant. But they forgot the dash and the except.
Mm-hmm.
So if we'll say, again, we'll go back to that scenario of the husband and wife wanting to buy the house, have acceptable credit, zero money, that's use dad or mom as a co-buyer and put them on the mortgage also, and we'll go to closing. Honestly, I mean, I don't want to blow your horn too much, but in all the years, we've only had one rejection, and that one will go down in infamy because the people just disappeared. They absolutely disappeared off the face of the earth, and we have no idea till today where they are. But that's it. I mean, everything that the financing is the most important part of going through with a HUD transaction. I mean, anyone can sell anything. They really can. But unless you want to take your money out of your pocket and finance it for your buyer, this is not going to happen. Now, for those of you out there in HUD land that are not a listing broker or work for a listing broker, get involved and buy something. This is your opportunity. It just so happens to be that Cathy has another bag of money that she uses. She comes to our seminars when we used to have them in person without the Zoom, with bags like duffel bags, and they're full of money. That was monopoly money, but nobody do that anyway. But if you're an agent and you do not work for a listing broker, get involved and buy an investment property for twofold. One, you can use it for your portfolio, and two, you'll get experience in placing a bid, which we're going to do in about 15 minutes. And you're going to see how easy it is to place the bid. Now, what kind of financing do you have for investors that might be agents that want to buy something and don't particularly want to use their money?
That would be the Fannie Mae home style renovation mortgage. That would work perfectly with the HUD properties or any investment property. You can roll your repairs into your mortgage. It's the same thing. It's one mortgage. I forgot to say that on the 203K. This is one mortgage. So it's not two separate mortgages, one mortgage for 30 years, fixed rate. But yeah, you can do the conventional home style, and investors can put down as little as 15% down. So that would be the program. Same idea as the 203K. Can do the renovation budget. You know, we do have consultants involved with the home style, even though they're not HUD. It's not an FHA mortgage, but yeah, it's a great program. I have investors utilize this program all the time because they want to free up using up all their cash. It gives them the ability to purchase more properties.
Well,
But
it used to be HUD had a restriction that an investor could only buy 4 properties in a year. And that's going way back. That since has changed. An investor can buy as many HUD properties as they have money.
Yep.
And it's an opportunity to get your investors involved. Keep in mind, when we do the bid, and we'll talk about it, high bid wins and everyone else loses, period. That's the only criteria is high bid.
also keep in mind with when you're dealing with a lender as an investor, it's not a fix and flip type program. This is, I know I said it earlier, but that's really important. A lot of people will call me and feel like they want to sell the property. We do it where we know your intention is to rent the property out.
Correct.
So you have to.
Right. If anyone has any questions concerning the financing,
I put my phone number, email in the chat. It's the very first chat there. So, and if you have questions now, go ahead. Sorry, Ron.
yeah, it's okay.
I like to cut you off.
Now, if you have any questions that you might want to share with everyone else about financing, right? Ask them now. And regardless of what state you're in or where you are, Cathy will help you out.
Yep.
Same way with Hana and the same way with myself. We don't care where the rules are generally the same in every state except the $100 down program. And we know for a fact that Pennsylvania and New Jersey have it, and most of the other parts of the country do not have it.
Yeah.
The area between New Jersey and Maine, which is 3P, has it, and Pennsylvania has it, which is 5P. There are other areas that have it, but you can check on the HUD Home Store with that. So are there any financing questions that anyone has? No. Good.
All right. I'm going to head out, everyone. I'm sorry. I usually stay for the whole call, but I have to go to another appointment. But if you have any questions, even if it's not I'm licensed in New Jersey and Pennsylvania, but no matter where it is, just reach out to me. I'm happy to help. Okay. And if I don't know the answer, I'll call Ron. Or you can.
Have a good trip to Vegas.
Thanks. I'll see
Bye,
you.
Kath.
Bye, Hannah.
Thanks,
Bye,
Cathy.
guys. Thanks. See you, Matt.
Now we're going to focus on selling a home. All the properties that HUD has available are on the HUD Home Store site. If it's not on the HUD Home Store site, it's not available. I don't care what is in the MLS or what is in the Z site or what is in the R site. I'm not allowed to say the words, so I'll just use the initials. It makes no matter. It makes no matter what it says. The only real-time site is the HUDHomestore.com website. If it's on there, it's available. If it's not on there, it's not available. It's real simple. Now, all HUD houses are sold online. There are agents out there in real estate land that want you to prepare your state agreement of sale. Don't listen to them. They're wrong. We get at least 1 or 2 times a month an agent sending us a full state agreement of sale with all the buyer's information and a deposit check. That is not the way HUD homes are sold. They're sold only online. You have to be registered in order to sell a HUD home store property. The registration is free, and there's only one site, hudhomestore.com. Now the benefits, right? Who can buy and sell a HUD home? Actually, anyone except a listing broker or anyone that works for a listing broker. We are prohibited from buying a HUD house, as HUD does not want any signs of improprieties. And it should be that way. The FHA insured mortgage goes in default. People will say, well, how does a HUD house come to be? Well, we'll say hypothetically, the lender with the horse and carriage did a loan, and the loan went into default. Well, the lender forecloses, takes the deed, sends it to HUD. HUD in return sends the lender back 100% of what they are owed, because the loan is insured. The lender then takes the property, gives it to HUD. HUD assigns it to a marketing company throughout the United States, and the marketing company assigns it to a listing broker. That's how a HUD property goes on the market. Now, individuals and investors, nonprofits, and government entities can buy a property. Now, you've all heard about, I'm going to skip a little bit, Hana, but you've all heard about the Good Neighbor Next Door program. That's an interesting program. When a new listing comes out and it's in a revitalization area of the particular geographic area where the property is, it goes for the Good Neighbor program. Now, the Good Neighbor program means that a qualified police officer, fireman, fire lady, I didn't forget this time, teacher, or EMT can get into a lottery with this program. And you simply go through a broker. The broker puts the bid in. It has to be full price bid. And if you're the winning bidder, you have the opportunity of buying this house for 50% of what it's listed for. And an example would be, we just had one that was listed at $150,000 in Center City, Philadelphia, which the lucky winner of the lottery got for $75,000. Now, they do have to be approved for the $150,000, because if they sell the property or rent the property, they lose that 50% discount they got within a certain period of time, because what HUD does is take a silent second mortgage. And for those of you that do not know what a silent second is, It's a second mortgage that's not recorded. It's just there that HUD can record at any time at their will. So it's a fantastic program. Understand that HUD does not pay a commission either to the listing broker or to the selling broker. If you have any questions on this program, we'll take it at the end of our little meeting here. Hana, do you want to put a bid in now? Would that work for you?
Sorry, I just had to unmute myself. Sure. Let me go ahead and get us over to the HUD Home Store.
Now, in order to place a bid, keep in mind, if you've never placed a HUD bid, and usually when people get finished with this course, they're really psyched about it because they want to get in the program. I mean, HUD is the largest seller of real estate in the United States. They sell more properties than any bank, than Fannie Mae, Freddie Mac, any of the banks. HUD is the largest seller of real estate. And as you know, if you've done with business with any of the REO companies, when you place a bid for your client, the first thing the bank wants to do is cut your commission. That's it. Well, you make the deal go, we have to cut here, we have to cut there. I stopped that. I just will not do business that way anymore with the REOs. When you place a HUD bid, as you will see when Hana gets to that point, when you place a HUD bid, you get paid a set commission. If you want less, you can take less, because as we know, in every state, all commissions are negotiable. Now, you can negotiate downward, but you can't negotiate upward, right? Our fees that HUD pays us are not negotiable. There are contracts that listing brokers have, and that's what the fee is. As a selling broker, you can do whatever. You don't even have to take a commission to make your bid better, and your buyer can pay you off at settlement on the sheet. So that doesn't mean that you have to take the commission, because remember, HUD determines what the winning bid is going to be by the highest net bid. And net is net is net. The bottom line, the bottom number. Okay, this is your HUD Home Store site. There is only one HUD Home Store site. There are other ancillary websites out there which make believe HUD sites, which charge you $25, $30, $50, or $100 to join. They're frauds. You're wasting your money. HUD does not pay us to train you. That's part of our contractual obligation. They do not recognize these ancillary sites because they don't. This is the only legitimate site. It's a real-time site. So if something is on there now at 2:05 p.m. Eastern Time, it's available. The bid deadline is 11:59 tonight, Central Time. Now, what I'm going to tell you next might make you a sale. I know it made us a few. 11:59 Central Time It's 12:59 Eastern time. So if you think you're late getting in a bid and it's after midnight, you got plenty of time. Our phones are open until midnight because we take bids all crazy hours. I mean, what do people do? They look at the website. Oh, look at this. This is nice. I think I'll call up on that. You'd be surprised. We pick up our phone. It's close to midnight. Oh, I didn't expect to talk to somebody. Well, why'd you call for? I thought it was going to be an answering. No, we're here to take your bid. And, you have about a half hour to make up your mind which way you want to go. Are you an investor? Are you an owner occupant? Are you a cash buyer? Are you a mortgage buyer? Do you have a pre-approval? All different things like that. The site itself, and this is a government site. This is not a Z site or an R site or a C21 site, anything like it. This is the government website. Share it with your clients because your clients can register on there as part of the public. And when something comes up in zip code 08016, guess what? We're going to send you a little advisory that a property will soon be available at 08016. Contact your agent. Now, if you look at this site, you'll see a map. You'll see dark blue, California, Oregon, Washington, Arizona, Alaska, Puerto Rico, Florida, all the states in the East Coast, West Coast, but it's a light blue area in central United States. There is no inventory that is available for sale in those states because the contract has yet to be resolved with which and who the marketing company will be. Soon, possibly. But we're going to place a bid now. And folks I used to work for, they got very nervous when we would place a bid and we would forget to cancel the bid. So, excuse me. So
We don't forget anymore.
I'm sorry?
We don't forget anymore.
We don't forget anymore. No.
All right, let's go see what's in Jersey.
Ron, you got to cancel the bid, Ron. You got to cancel the bid. Yeah, we cancel it. No problem. So we sign in to the HUD Home Store site because when you register, you're going to sign in with your name and your password. Put it in your notepad in your cell phone. Don't forget your name and your password. You won't be able to sign in otherwise. So we're in New Jersey, correct?
Yep.
Okay. Well, that's
Look,
pick up.
we have
Well,
exclusives and extendeds available. Where do we want to buy? Look, we even have a lottery in
Wow.
Newark. Look at that.
oh yeah. Well, we don't want to buy that. Okay.
I know, but there's one available.
I know. Anyway, we'll buy something in Mercer County. That's $327,000.
All right, Robbinsville it is.
Right.
All you have to do is click the case number here that's underlined in blue. And it'll give you more details about the property.
Now talk about time because you're on the clock.
We're not on the clock yet. So when you place a bid, you only get 15 minutes. Once you push this submit an offer button, you start being timed. So Ron and I tell everyone to make sure you look at all the addendums and the disclosures on the property. Everything that is available for the property is in this addendums tab. Usually the list is quite long, but everything you should take the time to read. When you click on it, it will download and come up in a PDF view. Ron, you want to tell them about the property condition report?
Yeah, sure. Anyway, now this is not exactly what you would call a home inspection. This is a inspection made by the HUD contractors that check the main components of the property. And they'll either mark it like there's no air conditioning there, so it's non-applicable. The heating is okay, and the HVAC ductwork is okay. The utilities were on, so we're good to go. The electric is okay all down the line. Utilities are on, that's cleared. The appliances are there, they're okay. The plumbing was checked out, and the water supply was functional. The heater is okay. The septic system or the sewers are okay. And the roof is acceptable. This does not mean that this house does not need repairs. This is someone checking what they're checking. They're not certifying it, and HUD still sells it as is. My advice is for all owner occupants to get a home inspection, especially in areas like New Jersey, where a lot of properties have underground oil tanks, and we don't know it because the inspector that went out on the property doesn't know it. But a home inspection, when they come with a sweep, will know it. Now, that could be a major detriment of buying this house if it has an underground tank. So it's up to the buyer if they choose to proceed or not. They can cancel the transaction and get their money back on the deposit if it has an underground tank. An investor cannot. An investor, that's it. There's an underground tank and you don't want to move forward, you will lose your $1,000 or so deposit. That's it. Done, finished, not up for debate. An owner occupant, yes, you will get your money back. Okay. Now, usually there are multiple photos in the HUD Home Store site. I know with us, there are at least 30 or 40. This
one is 61.
This is 51, which is cool. And you get a good idea of what the house looks like. Would you like to make an appointment today or tomorrow to see it, and then we can get the bid in? Now, with this particular property, the bid deadline is October 2nd at 11:59. So being it's 23rd, that just came on the market, you have time. You don't have to rush out and do it. So let's say we showed the property, we're going to get back to our home office and we're going to put a bid in. Now, everything is DocuSigned, everything is online. That's the last time you're going to have to see the buyer, except for the walkthrough in that house, because they've already been there. They're going to place a bid, and that's it. So that's submitted offer.
All right, we're gonna go down to the bottom right-hand side where it says HUD registered bidder, submit an offer. And immediately it's going to ask for you to log in if you haven't already. NAID number you will get from your broker, and then you put your license number in. Once it has started to process, you can see the big bright letters that say time remaining for bid submission, 14 minutes and 54 seconds. You get a total of 15 minutes to fill out the entire bid. It's not a lot of questions, so it's pretty simple as long as you have everything in advance. The only thing that HUD bids require that most bids do not is the social security number or EIN number of the person or LLC that is buying the property. So let's see, what are we gonna bid? List price is $327.
I want this house. And
How much do you want?
they're asking 327, so I want to bid $355,116.22. And you say, why that crazy number? Well, because A, no one else is bidding that crazy number. And we have already won bids for $5 difference between our bid and somebody else's bid. Now, remember, all bids are sealed. So no one, including the listing broker, has any idea of how much the bid is. So if you're going to place a bid that's different. And $116.22 or whatever it is between the 355 could make the difference in getting that property. Now I don't want any seller assist money because I know it's going to reduce the net. So we're going to put a 0 in the seller assist.
You have to make sure we remember as well. Number 4 is how are you purchasing? 203B, 203B repaired, 203K, conventional or cash, and you just select it right here in the options.
Oh, we're going to go
Let's see.
conventional.
Conventional, all right.
Correct.
Now HUD automatically populates the amount of commission once you enter the purchase price. So it's going to automatically populate it. This is where Ron said earlier, if you want to lower your commission to make your client's net bid higher, you can change that number here. Obviously, you can't go any higher, but you can go lower if you want to increase the net amount due. So let's say we wanted to reduce our commission to $8,000. It immediately changed the net to $336 from the original $333. Let's see if we do this. Oh, wrong one. All right, so let's go back. Where are we at? Purchaser is an owner occupant. That is the only option right now because we're in exclusive. This question asks if the seller is willing to, if you'd like the seller to keep it as a backup offer, meaning if you are not the first person to win the bid, if that bid does not go through, can they keep your offer and call you later? We always recommend to do this because this is your only shot. Once it's off the market, if there are a list of 30 bids in there, if you haven't decided to be a backup bid, then you don't get another chance until every other one of those bids has been requested.
That's why you always put on there, may hold the bid.
Yes.
We've won numerous bids as second, third, and fourth place
Absolutely.
on bids because deals fall out, as we all know. Cold feet, financing, whatever, appraisal, could be numerous things. So I want to be in a backup position. And I feel I have a strong bid in, so I very well may win this bid to begin with.
Mhm.
Okay.
So the next 2 questions are qualifiers. If you can answer yes to either one of these questions, you cannot, I'm sorry, if your buyer can answer yes to either one of these 2 questions, they cannot purchase the property. So we're going to say no to both because we do not work for any of those. Our buyer is free and clear of all those issues. Then it's down to the buyer's information. You need, like I said, the buyer's social security number, full name, address, email, phone number. Email is crucial because like Ron said, every single thing goes through DocuSign. If the email is wrong, you are going to wonder why you have not been getting any of the consultation information, any of the contracts. Everything goes through email.
And I'll add on there, do not place a bid using your broker's name and ID. Everyone should have their own sign-in and password, because whoever's email appears on this particular form gets the notifications. And I don't know about you folks, but I don't want anyone to get my emails, and I got $10,000 riding on this sale, that they don't forward me what they get because they don't know what it is. So
Exactly.
use your own email and your own names. Very important.
If you have a secondary buyer, you're going to click here to add another purchaser.
Now, we don't have time for that.
And then you have to choose who your title company is. Most of them are registered in here. If you just start typing a couple letters of the name like Emerald Title, it's going to pop right up, and then you can pick them. Oh, I don't know why that one came up. Let's see. So it'll populate their information if they have already been in a HUD deal. If not, you can add it in. It's not really a big deal. Then you have to pick your escrow officers. Down here, you're just going to put your broker's information.
How
All right,
much,
so
how much time do we have?
just
Remember,
going up to 8 minutes and 24 seconds.
we got plenty of time on this.
I don't know. We got a question in the chat box. Let's see what it is. If the parent is financing, would you put them second or the buyer second?
Who's going to be living in the house?
Faye, who's going to be living in the house? The kids.
They are primary buyer.
Okay, so the kids would be first, the parents would be second.
Correct. Money is second, primary is first.
Okay. All right, so we have completed everything. Let's see if we did it all correct. Continue. This just says that if your bid gets accepted, you have to upload the CPL for the title company. All title companies should have this available for you. It shouldn't be a problem. Again. All right, it's going to give you one more chance. You filled out everything. It wants to make sure you go through and you check your price is right, your commission's right. Everything is exactly what you want it to be. You're going to read all the certifications, the terms and conditions, and if you agree to them all, you're going to check the box. Then you're going to confirm the bid. Your
Okay.
bid is now
Now,
successful.
this is so important. You have to print this out. Must absolutely print it out. It is your only confirmation that you will have that you actually placed the bid. And this is from the government. This is from HUD. It gives you the current system time to the second. 1:24 and 37 seconds p.m. Central Time on September 23rd. This is the only proof that you actually placed the bid.
All right, we got another question. Aileen said, I'm confused about the question about agents submitting the bid. Can we not submit bids for ourselves?
Yes, you can. If you are not a listing broker, one, and two, you'll be given a notice before you do it that if you submit the bid for yourself, regardless if you're an owner occupant or an investor, HUD does not pay you a commission. Now, if somebody else submits it for you, that's another story. But HUD does not pay you a commission if you submit the bid. Now, there have been a lot of cases over the years where agents have used, Hana laughs at this one, where agents have used the listing broker, in this case it was us, to submit a bid for them because they didn't want anyone in their office to know their business. That is legitimate. you're not going to get any referral fee or commission, but you already know you're not going to get a commission. So, you know, loose lips sink ships. There were a few cases that agents discussed buying properties. There's a bar down in South Philly, a steakhouse. There's been a lot of problems at the steakhouses. The two agents working in different companies, they meeting for a few beers and a steak sandwich after work. And one of them said to the other, as the story went, boy, you ought to see this deal I'm getting in Packer Park. I can pick it up for $50,000 under the market. The other says, yeah, really? Where is this? And he gives him the address and he tells him the bid. Well, guess what happened? You already know what happened. The second agent went back and cut his throat by $500. And that was the end of that friendship.
Yeah.
Just do not discuss your business with anyone, either in your office, except your broker, okay, or anyone at all. When you place a bid for a client or yourself, it's confidential information. It's none of anyone's business. Do not be a braggart. And we call it Schultz. You remember Schultz? I know nothing. That's what it is. I know nothing. Schultz it. So after you print this out, you're pretty well set to go. You will receive, if you're the winning bidder, you will receive a notice via email that you are the winning bidder. If you're a backup bid, you'll receive an email that you didn't win, but you're backup. You don't know where you're backup, but you're backup. A large percentage of these transactions do die. So it's, you know, it's nice to be in backup position. Now, we're going to show you how to cancel a bid because.
Yes, let's say we've decided we don't like this one anymore.
We don't want Ron, you got to cancel the bid, Ron. Okay, don't punt. I know.
So anytime you want to look at your bid after the fact and before it's been decided on, you just have to log into your account. And you have to remember something about the transaction. Whether you have the confirmation number, the case number, the last name, any of those things will do. You're going to search for it and it's going to populate a list of bids with that information. If you click on the confirmation number, it will bring you back into the bid. As long as the bid has not yet been decided on, it'll give you the details and give you the option to change things on this bid. Scroll all the way down to the bottom. You can modify your bid if you've put in the wrong information. If you want to change the amount, if you want to change the title company, you can modify the bid. If you've decided you are not going through with this bid at all, this buyer has backed out, you can withdraw. It takes a minute to repopulate. Never refresh this page or else you have to start over for anything you've done, whether it's withdrawing or modifying. If it freezes, you have to go back to the beginning, which it looks like it's freezing.
Correct.
All right, let's try again.
Yeah.
Oh, there's a question in the chat. 1 minute and I will get to the chat. Let's see. All right. It says, by withdrawing this bid, you are removing your bid from HUD's consideration. You're going to check here that you agree to that. You're going to hit withdraw this bid.
Good.
Your bid has successfully been withdrawn. Please print this page. Print this page. Anytime it tells you to print this page, do it. That way you have proven that you have withdrawn the bid. If something pops up and they say you win and your buyer didn't want it anymore, you can say, no, I'm sorry, I've already withdrawn the bid. And it's as easy as that. Let's see what the question is in the chat. Okay, let's see. Aileen followed up to our original question, said, so would we answer yes to the question, is agent a purchaser? On the HUD bid page, there is no question that asks if the agent is a purchaser, right, Ron?
Correct. With the real estate commission, on the agreement of sale, if you're doing a regular agreement of sale, you have to disclose if you are an agent buying a property. This is not so on the HUD paperwork. Whatever you use in the office for disclosures or anything else, it's not part of the HUD paperwork. They don't particularly care who you are or what you are, as long as you can pay for it. Now,
Okay, second question. Faye asked, how long does it take to know if you've won the bid? And I'm going to answer that by going back to the front page. Ron and I were saying earlier, you can see how long until the bid deadline. So say you place a bid today, but the bid deadline is not for 2 weeks, you have to wait that long. If the bid deadline is tomorrow, then you're going to have to wait until they've taken all the bids tomorrow. You look on the right-hand side under listing information, it has the listing date of when it was listed, the period that it's in, and then the period deadline is the date when it is submitted, the last date it can be submitted. So this one's the 24th of September, so bids would be open the next day on the 25th, unless it's a weekend, then it's Monday. Any other questions? Let's see. Nope, that's it. We've answered everything so far. All right, what are we going to do next?
now we're going to do the most important 2 words in the HUD contract. As is. I'll tell you a funny story what happened when I first got into the HUD project. There was a brokerage in Philadelphia, which will go unnamed, placed a bid on a particular property with an investor. And the investor bid whatever he bid. And when you place your bid, you get back a what? A confirmation. Well, unfortunately, the agent did not have comprehension of what a confirmation is. He thought his buyer won the bid instantly. So he tells his buyer, listen, you won the bid, congratulations. Buyer says, well, come on, can I have the key? This way I can get a HUD start and fixing it up. Okie dokie. So the agent gives the buyer the key and the buyer starts fixing it up a couple weeks after. Put in Corian countertops, brand new windows, hardwood floors, brand new kitchen, everything. But previously, a couple days after that happened, another buyer went in the house, placed the bid, and 2 days later was confirmed that he won the bid. So taking this back, buyer 1, who didn't win the bid, is rehabbing the house and puts thousands of dollars into it. Come settlement time, buyer 2, who is a legitimate buyer, makes settlement and gets a HUD sheet. He owns the house, gets title insurance, he owns the house, and moves in. A couple days later, somebody's banging on his front door. What are you doing in my house? This is not your house. This is my house. I own this house. He said, no, you don't. I own this house. Well, make a long story short, Philadelphia's finest show up. Surprised they didn't send a SWAT team in there for this, but boy, I'll tell you, it was a nasty scene out on the front steps. So the police officers are there, and luckily enough, The first police officer on the scene was a part-time real estate agent that knew what to ask and knew what to ask for. So he says to both of the parties, he says, well, let me see your paperwork. And the first guy, he shows him his confirmation. See here, I won it. And the second buyer shows him the HUD one and the title. So the police officer tells buyer one, listen, I really think you have a problem. You didn't win the bid. This is just a confirmation, which means that the seller confirmed that you placed the bid, and that's it. This buyer won the bid. He made settlement. He got clear title, and he owns the house. So do yourself a favor, as the story goes. Do not show up again on these steps, or you will be arrested for trespassing. And, well, needless to say, he never did. And he said to him, I suggest you go back to your real estate agent and have a little chit chat with him of what happened. A couple months later, I think there was a $35,000 or $40,000 claim with the E&O insurance with agent number one. And I'm surprised he didn't lose his license of something like that. It's you cannot make any repairs on a house, a HUD house at least, before you own it. We've had instances, this was the worst. I mean, this was the absolute worst. Now, we've had an agent sell the wrong house. She worked for me. I'm not proud of it, but she did. And we happen to have 3 HUD homes on one street. Now, in a lot of the cities, the address numbers are not there. So you have to find one of the addresses and then count 22, 14, 16, 18, 20. This has to be the house. Well, she didn't do that. She went to the first one with the sign in, which was really a nice house. The buyer put the bid in and won the bid. Yes, this is a true story because it was my broker that was involved. So, come settlement time, the agent shows the property for a walkthrough, and honestly, it was a dump. Nowhere even close. Buyer says, "Hi, this is not the house I bought." She said, "Sure it is." "No, this is really not the house I bought." Okay, here we go again. It wasn't the house that he bought. My broker had to write a check to HUD for $45,000, certified check. Luckily enough, the client didn't sue. He was just happy to get his money back and wound up buying something else from a different agent. But 3 weeks later, the agent quit. And for the most incredible reason that you could ever think of. She's lucky she didn't lose her real estate license. She quit because she didn't get paid her commission. which I know you're laughing, it's a pretty funny story, but it is what it is, what it is. And she went to work for another broker, God bless them. Do not do blind bids on properties. Do not let the buyers go to properties and give them the keys. Do not do these things because it's only going to come back to bite you. There's going to be a problem. Now, usually this course is 5 hours and it's done in the classroom because we have all kinds of props and things going on. But the Philadelphia, the Greater Association of Realtors has been nice enough to allow us to do a 2-hour Zoom. Please feel free to contact either Hana or myself with any of the information that you might need. I don't care who you are or where you work or who you work for. If you need any help in registering with the HUD Home Store site and you can't figure it out, Hana will walk you through it, or I'll walk you through it. Matt is recorded this particular session because this has been one of our better classes. We're sort of pandemicked out, to tell you the truth, and we try to put ourselves in with everyone, but that's impossible. I'll give you my email that I'm going to type in now. And I'll give you my phone number. Hana will do the same. And I keep reiterating that we really help everyone, and we do. This is, for the last 21 years, this is what I've been doing is the HUD work, the HUD brand. You can make a lot of money selling this. And the last thing I'll share with you is a little secret on how to sell a HUD house when you get in it. Open the door and smile. Say to the buyers, just walk through at your leisure, and if you have any questions, I'll be here. I mean, what am I going to do with a foreclosure? Seriously, walk in the kitchen and say, well, isn't this a beautiful kitchen? Well, no, as a matter of fact, it's not a beautiful kitchen. It's a kitchen. No. We had one property that we walked in the kitchen and we could see the sky. Okay. We had another property where we walked in the living room in the Fairmount section of Philadelphia, and there was a tree growing in the middle of the living room floor. Well, you have to be creative on this one, because we sold it for $25,000 above the asking price. And I was explaining to the buyer, you know, this could be the gem of the neighborhood. You take one of those fish ponds, what are they, koi ponds, where the goldfish are swimming, and you put it around the tree, you prune the tree, and you'll have a fish pond and a tree in the living room. That house now is worth, Lord knows how much it's worth. It is still there. So when you're showing the property, just have them walk by, this, that, and the other thing. You have any questions? I said, you know, you have to get your bid in by tomorrow night. So midnight, that's it, it's over. And they don't believe you because they think you're trying to hustle them. And you're not, you're telling the truth. And this is why you have your trusty cell phone with the property on the cell phone. And it tells you you have 18 hours, 4 minutes and 38 seconds to place the bid. And you shut up because there it is for them to see. You're not trying to hustle anybody. There's bid deadlines. And naturally, you explain the as is. Everything is as is. And you have to have fun when you're selling things, because if you don't have fun, it's time to get out of the business. Right, Matt? I mean, seriously, you have to have fun. So I had a buyer, and I had a lot of buyers that they asked basically the same question. Well, I see it needs a new roof. Are they going to fix it or replace it? And I just, you remember go repile? I just do a go repile. You take a couple steps backwards, you scratch the back of your head, and you smile when you say it, but it's okay because you're doing it in good jest. Let me ask you just one question. What part of as is do you not understand? The as or the is? It's as, and they break up, they laugh. Because they know the answer to the question. It's as is. You're not going to change it. I really hope you enjoyed today's class. Matt has something to say. Actually, he probably has a lot to say.
So Ron, Hannah, and Cathy, who already left us earlier, thank you very much for today. I dropped inside the chat a link to our YouTube channel. For those who are interested in seeing the video of this, we'll post that video within the next day or so. It's a great idea to go ahead and subscribe to that channel. Sorry, my dog's doing her 3 o'clock in the afternoon bark.
Everyone's dog today.
Yeah, that's the way it goes. Little dog, big bark. But those videos, so we have a whole video library there of all of our past sessions. It's really good information in there. The beauty of the videos, you can start watching it and pick it up whenever you want. You can stop and pause and come back to it. But this video will be posted within the next day or so. Speaking about live presentations tomorrow morning, 10 o'clock, Jack Barry. I hope you'll join us for that, and that is make your buyer a client for life. With that, we'll wrap up. Ron, Hannah, thank you very much for your time, your expertise, and everything you shared with us. And to our attendees, thank you very much for joining us today and for your questions and your engagement during today's session. With that, keep dry, stay out of those raindrops. It looks like the sun is fighting right now. I'm not sure how the sun's going to do with that battle, but with that, take care, everyone. Have a good afternoon. Take care.
Bye, Matt. Thank you.
So long.
Thank you, Matt.